So now I'm gonna bring up my trades that I took. So here was my buy that I took. So this was the buy that I took throughout this day on this was New Year's Eve. This was the night of New Year's Eve because the market opens after after 3 o'clock in the afternoon Pacific Standard Time. It's pretty much like a new day because in Zulu time or UTC, it is a new day. It's not the first anymore. It was the second. We're behind the UTC's time zone. Like I'm in Pacific Standard Time zone. So that's why it looks like it's still on the first. And that's kind of a little confusing, but I will go over that in a different video as well. So this screenshot that I took is the price action that was occurring on the night of New Year's Day going into January 2nd. And if you see, this area right here is the same, it's the same thing, same price action, right? Same thing that was occurring here is this. So the reason why I took this trade is you see this area right here and it's this right here, this area right here. You see how there's a bottom right here, there's a bottom right here, there's a bottom right here, there's a bottom right here. A bottom is when price does not want to break below a certain level. This level did not want to break. Price did not want to go below this, did not want to push lower. So price just kept going up, bouncing off this level, going up, bouncing off this level, going up, bouncing off this level. After this, because this was the fourth bounce, right? So this was the fourth bottom of this level, and this was a pretty significant candle compared to the rest of the candles that had occurred throughout the day. This is either an exhaustion candle or a gap candle. In this case, and I'll go over what those are in a different video, but in this case, this was an exhaustion candle as far as this move. And price wanted to go higher. So in this case, this is where that age-old term of buy low and sell high, this is where this comes into play, right? So you want to buy low, and this is low. And also, if you're trading price action, you want to buy above a bull bar. Bull bars are these white bars. Bull bars are when price goes up, and these white bars on the charts, they indicate price going up. You can also change the colors whenever you have a chart. Like most charts will have green and red bars, but psychologically it's easier for me, I found, if I just change the colors into white and black. It's just easier for me to read the chart that way. So you want to buy above a bull bar and you want to sell beneath a bear bar. In this case, because price had already bottomed out 4 different times, right there, and once again, same thing down here, 4 different times, you want to buy above a bull bar. This was a bull bar bouncing off the bottom. So I bought right above it, boom. Like this literally was the best opportunity to buy in this move. This was the best opportunity to buy. And after this buy, my stop loss was down here. So my stop loss was a total of, let me see, because I bought right here. It was about a 60-point stop loss pretty much. We look again, right there, boom. That's where I bought. So it's actually less. It was actually like right there. So it's like a 50, we'll just round it up to 50. It's a 50-point stop loss that I was risking. So I was risking 50 points, and my goal was to at least take it up to this area, right? At least take it up to this area. So in this case, when that occurred, that would have been at least a 232-point move. So that's a great risk-reward ratio. I'll even show you like this. My buy was here, so boom. Right there, right? This red indicates the like stop loss area, and this green indicates the profit area. So my goal was at least to take it up to this range, right? So in this case, I entered around 425. That was the time that I entered, and price moved up to this point, my take profit point, like my initial, like, all right, this is my ultimate goal. It hit that point in around 2 hours, around 6:35, a little over 2 hours. And look at the risk reward ratio. The risk reward ratio is a 4.49, so just round it up to 4.5. That is an awesome risk reward ratio. If you can get something like this, oh my Bob, you're golden, right? So I ended up waiting until this situation was happening, because when price did like touch up there wasn't anything indicating that price wanted to go lower, and I'll show you. I took price past this area because price was not indicating it wanted to go lower. It was still staying in this area. It was still staying up here, kind of just bouncing, ranging. And yeah, like this was probably what? From this high up here, 43,007. So this is like a 50 point, 60 point range that price was just bouncing in for an hour or so, and a couple hours. And I'm like, all right, my ultimate stop loss at this point was right here, this low right here. If price went beneath that, then I was gonna get out, but price didn't. And I had that happen, I still would have made profit. I still would have gotten out right here, and it would have been a 3.16 risk reward ratio. I still would have had a good profit as far as point wise and risk reward ratio wise. But like I said, that didn't occur. Price kept moving up. This is 12 o'clock in the morning. So like it was pretty late at night. I'm always constantly trading. Like I'm always looking at the market. I promise you, I'm always looking at the market. Unless I'm sleeping, then I can't look at the market. But if I'm awake, I'm like always, I have alerts going like all these lines, these are all alerts. These are all alerts that I have like set just in case price hits that level. Price went up to this level, it came back, it came down. So this was actually like opposite of this, right? You see how this was a big candle compared to everything else, and price tried to go beneath this, but ultimately it didn't. It started going up higher. Same thing, but in the opposite direction happened here. This was a big bull candle compared to all the rest of these bull candles, but price stalled out, and it's actually stalling out in this area as well. Like this was a previous high. This was the previous high that occurred. And if you're looking at the daily chart, because it went higher because it went higher later in the day, but it was a double top at one point on the daily chart down here. This was a double top. You can even see on this chart, it was a double top, right? This high, relatively same with this high. Price was trying to break higher, couldn't break higher. It started to go lower. After this occurred, I'm gonna go up to the time that I got out. So that indicates the time that I got out, right here. This is where I got out. So after this had occurred, I'm like, all right, I've already made, look at the risk reward ratio, 5.92. So just round it up to 6. That's a 1 to 6 risk reward ratio. I was risking 50 points and ultimately I made 300. Like that is amazing. That is an amazing opportunity as far as risk reward ratio. If you can get trades like this and you can focus on trades like this, you have the potential to make a lot of money. If you can replicate this like over and over, you have the potential to make a lot of money. On this trade, I only took one contract because it was a risky trade because it's overnight. And I knew that there was going to be a time where like I was going to be sleeping, so I didn't want to risk too much. So I entered right here with just one contract. And the way that price works with the micro E-mini contracts of the Dow Jones, every 100 points of one contract is equal to $50. So in this case, I was risking 50 points, which is half of 100. So half of $50 is 25. I was risking $25. In this case, I made 150, right? So I was risking 25 to make 150. That's an amazing trade. That is an amazing trade risk reward ratio wise. And that was only with one contract. So imagine if you have 10 contracts or 100 contracts or 1,000 contracts. Like it's a lot. It's a lot of money. You just gotta have the money to risk it pretty much. You just gotta have the money to trade like that. But yes, I was being conservative on this trade because like I said, I knew that it was potentially gonna be an overnight trade. I didn't want to risk too much. So I was okay with just taking one contract, took it up to there, got out. That was that. And I noticed because price was stopping out in this area, I was like, all right, I don't know if I want to continue to try to buy in this situation. And I say that because if you look in this area right here, we were kind of continuing this downtrend from before. Like this was the downtrend that began in December, early December. So we had a little pullback and we began to kind of continue the downtrend down. So I was like, all right, I'm okay with the buy right here, getting out right there. And I'm just gonna wait to see what the market does after market open. And that brings me to my next trade. So let me get rid of this. Get rid of this. So that brings me to my next trade, which was this. This was a trade that I took within my prop firm account. This is a $100,000 prop firm account that I'm working on right now. This area right here was the area that I got out in my other trade, was this zone right here. Or this candle right here was the area that I got out at. Price went down for a little bit further and then shot up throughout the night. I was sleeping. I wasn't trying to catch this because I was like, I gotta go to sleep. It's already 1 o'clock in the morning. I'm just gonna focus on the market later once the market opens. And that brings me to market open. So this was the market open candle. And market always opens at 6:30 Pacific Standard Time or 9:30 Eastern Time. You see how market open was a huge bear candle. Yes, we did push up above here and it was an outside candle because this high was above the previous candle's high and this low was below the previous candle's low. So it's an outside candle. Outside candles are candles where they're signal candles. They're trying to show the market is about to move in a direction. You kind of just have to pick. In this case, because this was a bear candle, it's kind of showing you price wants to go lower. So I did not enter right here. I did not enter right after. I wanted to see how price was going to react in this area right here because this was a low like that occurred throughout the night. So I wanted to see how price was going to react off that low. Price ended up bouncing right off that low, right, to go a little higher. And then I wanted to see how price was going to react in this area because this was the previous high that occurred throughout the night. You see how price it stalled out in this area. I did not want to break above this high. I didn't even touch up there. So I'm like, all right, this is more bearish price action than it is bullish, at least for what the market is showing me right now. So that brings me to this. You can see how my fill price on my first position was 42,779. That is around right here. That was this candle right here that I got filled on, because it was already after, you can say, a double top, because this was the first high and this was the second high. After a double top during the market trading hours, and I'm like, all right, I'm gonna take this down, and I'm at least gonna try to take it down to this point right here, because that was the previous low. This low was the low that occurred throughout the night, and this was the the area that price was bouncing at previously. So I was like, all right, I'm at least gonna try to take it around that area. So we got a pretty quick push down after this. Like, I mean, this was at what, 720, and this area was 805. So it was around a 40 minutes of time, and price had already gone, what we'll say, from this point right here down to here, it's already gone down almost 350 points. That's a big move down. But like I said, price is in a weird area right now, because we just had this big move down, and it's in this trading range right here. And in trading ranges, its price just goes up and down until a new breakout happens. Until price breaks out of this trading range, like, it's just gonna keep going back and forth. And that's what's occurring right here. So in this case right here, when price did make that 350 point drop, and it began to bounce up. Once again, this drop bounced right off that area, right off these previous lows. Like, price bounced pretty much at the same area. So the price action was indicating that price might continue to trade in this range that has been occurring, right? Like, that has been occurring throughout the last couple of days. So I wanted to wait until price came up to here to see if this gap right here was going to close. There is a gap between this low and this high. You see how this candle right here, that high did not go above this low right here. Like, there is a gap. There is a gap right there, meaning price does not want to push higher. It would have to go above this, or at least touch this, to show like, all right, I want to continue in that direction. In this case, it didn't. It tried twice to break this gap, to fill this gap. Couldn't happen. So price ultimately ended up going lower. You can see how there's a lot of ads in that area that I took, in that 42,500 area, which is this area right here, right? There's a lot of ads that I took during that time, because I saw that price was having trouble in this area, right? Price was having trouble right here. So ended up taking more trades. And my goal is normally like every 50 points at a position. You can see, like, except for this 500 area, there's a lot of trades that I took like every 50 points. And in this case, price just continued to just drop and drop and drop. I took this screenshot right when it was at this low right here. So right when it was here, that's when I took the screenshot. I ended up getting out of most of these positions right here, because I was like, this is already a huge move. Like, if we follow this down to this point right here, because this is where it was already a 550 point move, because this was my initial trading position that I took. If we follow it all the way down to here, because this is where this screenshot was, you see how it's a 500 and pretty much 50 point move from that initial trading position. That's a huge move. Price could have continued to keep going down, but I was like, all right, I'm kind of gonna be satisfied with this trade. I mean, look at like how much I was up. Like, that's almost $300. That's $250. That's almost $200. That's almost $200. You know what I'm saying? Like, every single one of these trades was up a significant amount. So I was like, I'm just gonna be okay with this. I'm gonna take it, and at least a majority of it. I let these trades down here, I let them kind of run for the rest of the day, and I ended up getting taken out in this area. But if you look at the majority of these trades, like, all of these were pretty much taken. So you can take a small loss when you have like that much of profit. You can take a small loss, and like I said, losses occur throughout trading. It's inevitable. You're going to take losses, so you kind of just have to be okay with taking losses, and it's the risk that you assume whenever you take a trade. And in this case, the risk reward of this trade was ultimately, I was risking at least 156 points, but I made, like I said, around 500, and I was up at one point at least like 550 points, 570 points. So risk reward ratio 1 to 3.5, that is amazing. If you can get at least a 1-to-1 risk reward ratio on any trade, then you're good, right? The more risk reward ratio that you shoot for, so if you shoot for like a 1 to 2, then you're just making that much more money. You just have to be patient, more patient. Like in this case, if I want to do a 1-to-1 risk reward ratio, then I would have been risking 156 to make 156. That would have occurred in 10 minutes. right? Every single one of these candles indicates a 5-minute candle. So it would have occurred in 10 minutes. I would have hit a 1-to-1 risk reward ratio. In this case, there's no reason to like get out because price is still going lower. These are still bear bars. These are still bars that are showing that price wants to continue to go down. And even when you got these bull bars, it wasn't that much of a pullback. Like price did not go in the opposite direction that much. Like that was probably what 100 and, I mean, that is kind of a lot, but in the grand scheme of things, it's not that much. Like if you look at this move, it's not that much. And I was still up from my initial position from up here, right? So kind of just have to play by ear and let price action do its thing. And yeah, you can see how just throughout the day, price ended up bottoming out in this area and then bounced up a little bit. So I know that I just said a lot of different things, a lot of different words that you may not understand or you may not have ever heard. And there's a lot of information that I just boom, 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 like threw out at you. This is trading. Like this is what the market is. This is reading price action. And I didn't even really go into like the super duper like bare minimum fundamentals of understanding this price action. Like I just did the basic stuff. I'm not gonna lie to you and tell you that trading is easy. Trading is fucking hard, bro. Like it is a fucking hard job. But if you can understand how to do this, you can do this from anywhere. And if you have the money to do it, you can make a lot of money. A lot of money. Trading is all about percentages, man. Trading is all about percentages. See, our price just kind of like leveled off in this area for a little bit throughout the night, and then we ended up going a little higher, right? And right now I'm holding a position from right here. I have a buy position right here, and I'm holding it over the weekend because you see how this right here, this is a bull bar inside of this outside candle, inside of this bear bar. So price doesn't really know what it wants to do, but it's still following this trend line. It's still following the bottom of this channel that price has been following for the last year. Is price gonna go higher? I have no fucking idea. I have no idea whatsoever. But price is showing right here that it does want to go higher. I don't know how much higher it wants to go. Price might end up going down here. Price might end up opening in this area right here. If that's the case, I'm gonna get out for break even or a small loss. Because in that case, I can just begin to load up on the sell side and play it off of this high because I'm like, oh, price doesn't want to break above here. So I just wait until price comes up in this area. I wait for a bear bar, short underneath the bear bar, and boom. There you go. Like I said, man, there's a lot of information that comes with trading. There's a lot of information you have to understand with trading. It is not easy. It is not easy. And I'm going to try to get better at like kind of explaining all this stuff to you because like I said, man, I know it's a lot. I know it's a lot. So I apologize if you hate me, but it's just the way that it is. If you want to learn trading, you gotta understand this shit. So yeah, we'll see what occurs throughout the week. Like I said, this is the hourly chart. So we're nearing this high on the hourly chart, and this is the trading range. I'm gonna put this like this. So this is the trading range that price is within right now. This right here, this blue line indicates the 50% area of this range. So you really want to pay attention to how price reacts in this area. And the reason why I took this buy right here, which was at 825, right? If you look down at the bottom, 825. This was the 8 o'clock. This was the 8 o'clock candle right here. You see how price bounced off the 50% area, right? And then started to go higher. So this is showing that price wants, at least on the hourly chart, price wants to go higher. And it's kind of showing on the daily chart, price wants to go higher. So you always want to look at different time frames whenever you're making a decision, whenever you're making a trading decision. You don't want to just trade off the 5-minute candle. You don't want to just trade off the hourly candles. You don't want to just trade off the daily candles. You want to compare what's happening in multiple time frames and be like, all right, what is this showing? What is this showing? What is this showing? Are they all showing this? Or are they all showing this? The chart will show you what it wants to do. Can't predict the market. You have to react to the market. If you guys ever tell me like, oh, what's the market about to do? I'm gonna tell you, I have no fucking idea. Because I have no idea. Like the market does whatever the hell it wants to do. I don't control the market. I just react to it, right? This week going forward, I'm gonna react to whatever is occurring in this area. And if price begins to push higher, then I'm gonna see how it reacts in this area. I'm gonna see how price, reacts once it hits this high. If it gets up in this area and it doesn't want to go any higher, then I'm gonna switch my bias, and I'm not gonna have a buy bias anymore. I'm gonna have a sell bias, and I'm gonna try to take it down. I'm gonna try to take it at least down to this area and potentially lower. Like I said, man, I know that this is a lot. This is a lot. This is trading. But yeah, that's pretty much everything that I wanted to explain in this video as far as like with the charts. So let me end this video correctly. Luna wanted to make a little appearance in this video. Say what's up to Luna. I know that I just talked about a lot of different things. I know that you're probably confused and you're like, bro, like what are you even talking about? What are you even saying right now? My goal going forward is to explain this stuff to you so that you can begin to understand like price action. You can begin to understand how this market moves and why this market moves the way that it does. It's gonna take time. It's gonna take a lot of time. And that's why I'm releasing a course so that you can understand even more. Like in the course that I'm releasing, I break down every single section of why you have to understand this, why you have to understand this, why you have to understand this. There are certain things that you have to understand, like fundamental things for you to understand the big picture. I'm not gonna say the name of the course yet, but just know it's called PTI. PTI is going to help you. It's going to help you understand the market and understand life in general, because life is like the market. Life has a lot of ups and downs. You just got to know how to deal with the ebbs and flows. That's what's to come in the future. I'm going to try to get better at these videos. So like I said, I know that I said a lot of information in this. I'll try to cut it down in the videos to come, but I'm not here to appeal to the masses. I'm here to show you guys how to trade. I'm here to show you guys how to be successful. And I'm not here to make a minute video, 2-minute video, 5-minute video on how to do something, because you're not gonna learn how to trade in 5 minutes. I'm gonna be honest with you. That's not what's gonna happen. You have to take a long time to do this. I've been doing this for years. I've spent over 18,000 hours understanding this. I'm telling you, it is not easy, but you can do it. You can understand it. Whenever you do understand it, if you have enough money to trade with, you can make a living. Most of the people that get into the trading game, their issue is capital. And that's where prop firms come in handy. I've passed multiple prop firm accounts in the past, but those companies have gone under, and that's a whole nother story. I'll explain that in a whole different video. After you understand price action, the biggest thing with trading is gonna be your trading capital. Understand how to get trading capital. You can use your own trading capital if you have enough, but a lot of people don't have thousands of dollars just sitting around like that. That's disposable income. That's like, oh, it doesn't matter if I lose this, you know what I mean? And that's where prop firms come in. You can use a prop firm, but there's a lot of iffiness that comes with prop firms as well. So the one that I've just recently found, I've seen a lot of good reviews. I've been paying attention to them over the last year, and they haven't had any issues that I've noticed. So that's why I'm going with them. And like I said, I'm close to passing that account. So I'll keep you guys updated whenever I do end up passing that account. I'm gonna end this video here, and I just wanted to say, always remember that love, understanding, integrity, courage, and faith is all that we need to strive for in order for us to reach towards our true potential to infinity. We all have infinity within us. We just have to choose to live infinitely. So embrace the infinite. On that note, I love you guys, and I'll see you guys in the next video. Whoosh.